routine case study of certified general accountant. So this is the module 2, strategic, operational and ethical analysis. Within this module, we will see today strategic investment analysis, operational analysis, ethical behavior through the organizational planning process. It is very carefully. So decision tree technique in capital budgeting. A company has made following estimate. If the cash flow after tax of the proposed project, that company used decision tree analysis to get clear picture of project cash flow inflow. The project cash cost is 80,000 and the expected life of the project is only 2 years. So the net cash inflow in the year 1, the probability is 0.4 may come 50,000 and probability is 0.6 that cash flow after tax may be 60,000. So here in the first year, 2 cash flow may come and probability is that 0.4 and 0.6. So equivalent is 1. So in the year 2nd, here the probability assigned with that 50,000 and 60,000. What is the again probability? Look here, 50,000 probability is from that 50,000, that 24,000 come is the probability is 0.2, 32,000 comes, so it's probability 3, 44,000 may come, it's come, probability is 0.5. And same way, if cash flow after tax 60,000, that probability 0.4 is 40,000, and 50,000, the probability is 0.5, and 0.1 is the 60,000. So that company used 10% discount rate for these types of investment. So calculate the expected NPV. So look here within this question, if we see the decision tree, what would be that? So here, look here. This is the decision tree plotting here. That is the given in our question. So here, if we look that company's decision tree, cash outflow 80,000, and from this cash outflow, this is the first year, and this is the second year. So in the first year, 50,000 cash inflow may happen is 0.4 probability, and 60,000 is may happen, the probability is 0.6. So here 0.4 plus 0.6 equal to 1. We know all probability, summation of probability must be 1. So this is the first year. And look here the second year. From this 50,000 they had given here, look here, the 50, 24, 32, 44, and probability is 0.2, 0.3, 2.5. So here plotting here, look here, from the 50,000 is the 24,000 probability is 0.2, 32 probability 3, 44 probability is 0.5. Same way 60,000, this 3 cash flow probability is 3, 0.4, 0.5, 1. So here if we summarize all, is the 1. Also here is the 1. So here 60,000 and 45,000 is 0.4, 50,000 0.5, 60,000. And now we have to calculate the joint probability 0.4 multiplied by 0.2. So this here is. Let smaller it. Look here. So here net present value of cash flow. Look here. So here there are different combination come. This is combination 1. This is combination 2. This is combination 3, 4, 5, 6. So we can make it number 1, 2, 3, 4, all A, B, C, D up to F. So 6 combination we count. First one, cash flow after tax. It is the number 1, first years. First years is 3 plot. Within that, here is 3 times. And so second year, this one also 3. So low is a combination. So here, look here. 50,000, 50,000, 50,000 is a ABC within the first year, first line. And DEF is the second year, last line. 60, 60, 60. And PB factor for what? 10%. 10% PB factor for the first year is 0.909. So this is the for the first year, all within that same figure, first years. So if we multiply cash flow after tax 1 with the PB factor first year at the rate of 10%, then we will get this figure, present value number 1, because we have different types of present value. So lastly we have to add it. So that's why is sign as a 1, PV1. So here 50,000 multiply 0.909, we will get 45,450. Same way in our combination F, 60,000 multiply by 0.909, and then we will get 54,540. So all thing is here. Now cash flow after tax, this is a combination of two. What is this one? 24, 32, 44, 40, 50, 60. So this cash flow is here. This is the number 1, this is the number 2, and PV factor, how we will get it? This PV factor is second year's PV factor, because we know our project is for the 2 years. First year's PV factor at the rate of 10%, we get it 0.909, and second year's PV factor at the rate of 10%, 0.826. So 0.826 for the all combination. So here cash flow after tax to 24,000, if we multiply PV factor for the second year at the rate of 10%, 0.826, then we will get 19,824. It is the present value of 2. Here is 1, here is 2, and the second years. So this way, 6 combination if we multiply, look here, if E, that means 0.826 multiply by 50,000, then you will get 40,000 is the expectation, 41,300. So this is one, and we should continue this line. This means that column we should continue, because the page is limited. So this continuation is there here. Look here. So all combination. Say again we have to write it, and then total PV. So PV1 plus PV2. So we add it here. PV1 plus 1 to PV1 45,450. If we add PV2 19,824, then we will get 65,274. And for the year 5, PV 54,540, and here 41,300. Then what we will get? 95,840. So this way, all 6 combination, if we add both present value, and from that if we initial investment, because it is the combination, it is the not this expected cash flow of 6 combination. So here initial investment 80 for all side, so 80,000 is initial investment, and now from the total PV, if we minus the initial investment, then we will get NPV of that combination. So here that combination here is minus. How we get it? Initial investment 80,000 and total PV is 65,274. Then we will get minus 276. Same way last one, if we see the combination F here, total PV is 1,04,100. So from that, if we minus initial investment 80,000, then we will get positive 24,100. So this one is the NPV of 6 combination, 6 item. Now joint probability. How this joint probability comes? Look here, 0.4 if we multiply by 0.2 and 0.6 if we multiply by 0.4. This way we will get the joint probability. This joint probability. So within the joint probability, if we multiply again NPV, this one joint probability, then get the expected NPV. So combination of 6 after calculating 6 combination expected NPV, then if we add it, then we will get expected NPV. So 6,223. So this is the decision tree. Sometimes we think that's very much complicated, but I think it is not complicated. We're very much easy, but we should understand the link, how we calculate it. So this is just for one demo type. So if we see that, and that type of thing may happen, may come our case study also sometimes. So that's why we are describing here. So it is the way decision tree we calculated here. So I think it's okay. And few thing is Now we are going for discuss operational analysis. So operational analysis, see the operational analysis. Operation means business operation. So all business depend on operation. Without operation, business cannot survive. Through the operation, business can earn their money, generated revenue from the operation. So operational analysis is a method of examining the current performance of an operational or investment and measuring the performance of against the established set of cost, schedule and performance parameter, or sometimes we are calling that KPI, key performance indicator. Operational is the work of managing the inner workers of the company or business so it runs as the efficiently and effectively as much as possible for achieving the goal or mission, vision or value addition of the organization. The specific definition of operation will depends on the industry and stage of the company. That sometimes involve operation means thinking the strategy about the system of the process of the organization. Here decision tracks is different. Sometimes we are taking the sometimes decision of the case and then we analyze it and make decision rule for the case and then we outcome and again feedback is that. So decision analysis here within the organization involve identifying, analyzing key decision in day-to-day business operation and capture the decision logic and support them. For example, if you have the bank, for example, 900, 1,000 branch, one state-owned bank, so they have the CBS. That means software of using that CBS. So if from any branch they logging to the system and then they can't connect the server. So it's also a problem, day-to-day problems, because customer will not understand the problem. They need the service. So why these connectivities fail? It may happen because sometimes our internet problem is there. And that's why for solving that problem, there are two lines is always using the banks. One part from the one vendors, another line from another vendors. If one line failed, then another line will come here. So that's why also another thing, sometimes they can't log in because of server failure. Also the sometimes because lot of people within the server that time at the same times that choice they hang it. So how, because the capacity of server is not the adequate. So how we will be able to solve that problem? We have to arrange a big capacity server. So this is the decision, different types of based on the situation, how you will handle it. So that type of decision analysis we have to do day-to-day business analysis, and we have to think about real-time things and everyday day-to-day situation that may happen anytime. So always we have to prepare. Being a professional, we have to think all things. That means that type of situation anytime happen that we have to solve it. So example of such decision should the customer be considered. Different types of customer may happen. So here the basic element of operational business decision. So here is the element. Look here, strategic analysis and then business strategy, and based on the functional we can analyze and take the decision and recommend to the management or top management or senior management team, and then operational analysis based on that detailed system again specify and system update. That types of operational analysis, again the functional analysis, again the strategy analysis. They continue. This is working. This is the basic element of operational business decision. So what is the business operational analysis? We can say that sometimes it's called the BOA. Business operational analysis is a strategy designed to determine if the general operational structure of a business in the harmony of the business plan adopted and supported by the company. So business operation or impact analysis, we can say that way. So different types of business impact analysis also we can say. Business impact analysis. So number one, first we have to define the boundary of business impact analysis. Which is the boundary? We know, and every software they have the boundary. What have to do within the environment, that environment. Same times, every business they have the boundary and have to define the boundary in the business impact analysis. Then identify activities that support the key product or service of the organization. Sometimes few are the product, sometimes they're the service, and in the third, access financial and operational impact, and identify critical process. Then prioritize the critical activity which have to do fast, and then we have to analyze, estimate the resource each critical activity will require the resumption, and then determine the critical activity and identify. We have to identify the that means the critical activities, how we resolve it, and determine the critical activity, how we solve it, and again we have to do it. So that type of work we can say. So here sometimes we can say this way. So we have the strategic planning, we need it, the setting the broad long range goal for the top management or senior management team, SMT also we know it, and tactical planning we have to adopt it, the identify the specific short range objective by lower level management, and then operational planning we do it, the setting up the work standard and schedule, and then contingency planning we need, backup plan in case of primary plans policy, that type of contingency, and we need it. So conducting the business operation analysis require a depth looking of the way the company organization, how good and service are produced. So here the every aspect such order processing, sampling. If we think the manufacturing organization, every aspect such as the order processing, shipment, delivery, accounting process, marketing process, and also the distribution channel, everything, supply chain management, all within the integrated of that type business. So here we can say that there are some value chain of the organization. This value chain we can do this way. Sometimes we have to need the plan, and within the resource we make it for the organization vision and mission, how to achieve that, and the delivery, the product or service, and then sell it, and that can be service also. So business capability we can this way create product or service, good service, and deliver product and service, and then engage with customer, retain the customer long run, manage the business in different way, and cross boundary process. This way we can do it, and sometimes more informative, and also there are some process area here engaged in the customer. So there are some, so here source is that, however we take it from here. So this way we can do the value chain for the organization, and companies can choose the conduct business operation analysis in-house or hiring analysis, and monitor, evaluate the operation, etc. And sometimes, you know, in our country, that is in different country, they have the strategic policy also. For example, if any person, new person, you give him the job, they can bring their item, that means their laptop or PC, to the organization. So that what is happening, organization do not purchase the asset that time. So money saving is that. But one trade is that person may took the data from the organization within his laptop. So that type of policy also need. So that type analyzing capacity, everything, all within the organization based on the sustainability, retain the customer, long run and invention the new product, everything, always critical thinking, always problem solving mining, time consume, that means time management, all within the organizational analysis. Here, look here, step analysis, that means data collection analysis first, then problem description, system modification, general alternative solution we seeing and evaluated, and then system selection, which system we are taking from, and that implemented, and monitoring review continue, control require here, and then management function need the plan, and after planning, doing that, implement is control it, and again management tier is that main strategic, who would take the plan? It is the top management, that means senior management, they are the strategic plan taking, and the implement, who are implementing mainly practical or operational level, mid level, and control mainly operational person, and the feedback again come to the top management. So this way can strategic analysis can be happen. So operational analysis, we can say that the method of examining the current and historical performance of an operational and investment and measure the performance against and establish set cost, schedule and performance parameters or KPI, key performance indicator. So strategy improve the business productivity root cause analysis here also, root cause analysis and product efficiency movement and implementation field planning and continue management improvement. Always that means that type of analysis is always happening here within the organization. So operational analysis give us the understanding of what happened now and our operation is the short run and the past, even through one single short run event cannot that means that company can be stop the production also. For example, if our analysis go bad, for example, you material shortage, your production oriented organization, you have the machine, you have the office, you have the manpower, you have time, you have the overhead, all things, but material is shortage, so production will be hampered. But again you think that you purchase huge material and keeping in your store. So what is happening here? Working capital engaging here. Sometimes that material can be destroyed, so need the overhead cost also. So that's why in cost accounting or management accounting or supply chain management, we are using the effective inventory management, different types of inventory management happening. So that also part of the operational analysis. So here, if you see that, look here, we are using there are some primary objective organization and support activity also. We are there are different types of activities, then infrastructure, human resource, technology department, that means procurement. Also, some are the primary activity are that inbound operation, outbound logistic, market sale and service, and from that we get the revenue, and from the after minusing the that means cost of goods sold from the sale, we get the margin. So this way, the key operational activity for the company include manufacturing, sale, advertising, and marketing activity. The operation income show the company's financial statements in the operation profit margin after deducting the operating activities from the operation revenue. So here we are calculating here the ethical behavior through the organizational planning process. So what is that? Building ethical information system strategic manner in an important consideration for upper management when setting organizational process and objective. For example, you are doing job as a CFO and your management wants to show the higher revenue for giving their performance. So that's why they said that previously you were using weighted average inventory. For production, for the material supply to the production from your factory, previously you used weighted average method, but your management suggests you for this year you adopt first in, first out, because the previous purchase material is the less cost, but your sale price is high. So at this moment, if the less cost material, if you use your production, so your production cost would be less. So being a CFO or finance guy, you have to obey your MD or management, but one thing you have to consider the standard also, because a standard said that you can't change the policy. Otherwise, that is a standard if required, then. So that type of thing can be happen. And again, it's also ethical issue also. Another ethical issue is there, and management wants to give payment of that less tax. So different types of mechanism you can do on behalf of the management. Management wants this, but you cannot do it because you have the regulator, you have the ethical issue, also now the super regulatory FRC and CFO, auditor, all are the bound, all have to bound to, that means we are in under the umbrella of FRC now with the government organization. So ethical behavior is the vital thing. So when we work any situation, we'll think is we have to manage it through the proper way. So we have to do better thing, we have to manage it, we have to do it, and we have to obey the standard, we have to implement the standard, because there are different types of regulator also. Building ethical into a strategic planning of an important consideration of upper management when setting organizational process and objective. So organizational process objective, key point is building consistent value and ethics into the organizational culture. Effective strategic planning. A stakeholder theory, use it in different process, supplier, government, community. A code of ethics, also we have the code of ethics as accountant. IFAC code of ethics is implemented, all institute adopted it, and providing all employees and managers with training, confidential statement, ethical report, etc. And key terms is code of ethics. Guidance adopt the organization assess member understanding the difference between right and wrong. We have to do right thing, not wrong thing. Strategy and ethics, a stakeholder theory, we have to use it. And there are, look here, so is the company, here internal stakeholder someone, and there are different types of external stakeholder. So internal stakeholder within the organization, employees, management, owner or shareholder. Shareholder means there are ordinary shareholders, they're real owner, and external stakeholders are suppliers, society, that's the country, government for tax purpose, other purpose, creditors, and shareholders. This shareholders is, that means this shareholder is preference shareholders, etc. And also our main thing is customer. So from the supplier, we are taking the material and produce the product or good or service, then produce the product, and that product we sell to our customer. So this within the line, they are the external stakeholder, and this the internal stakeholders. So within the internal external stakeholder, we have to integrate within the organization based on our vision, mission, and strategy and value chain. So ethical integration need ethical integration. So here said, building ethical integration into planning implementation factor within the organization. There are 4 elements. Strategic planning should develop when considering ethical alignment, also developing a code of ethics. ethical training need, situational avoidance effective of the officer, confidential reporting system required, etc. The four element is that. And ethical behavior in business, if we see there, it's taken from the US. So here, ethical behavior business, ethical behavior in the workplace, obey the company's rules and regulation, communication effectively, efficiently, develop professional relationship, take responsibility, professionalism standards, be accountable, uphold trust, show initiative within being told, respect the colleagues, work smartly, right use the official time, that means office time, right time. For example, if your office time is 9, so you should enter before 9, and your office time is 5, 9 to 5 or 10 to 6. So sometimes we cannot leave the office, but we have to leave the office just in time. So work engagement, motivation other, etc. Solve unethical workers. That means we have the how we can solve it. We need to establish the rules, accept the compliance, list of consequence, and etc. Disciplinary action required for understanding. And unethical workable behavior is, that means there are different types of that means sexual harassment and violent, non-official, etc. as the unethical. But we have to obey the organization, and ethical item we should do it. So how to improve ethical behavior in business is the question. How to improve ethical behavior in the business? So business ethical for executive, how? Need the honesty, integrity, promise keeping, trust, loyalty, fairness, concern for other, respect the other, law abiding, etc. is the business ethics for executives. And improving ethical behavior in business, how? And there are different types of stages also: individual, standard and value, individual, standard and value, plus manage and workers influence, plus opportunity, code and compliance requirement, then that equivalent ethical choice of the business. So there are many employees use different ethical standard and the activity of the example, and the company fails to provide the goods example, that we have to adopt ethics for the organization. So here, how professional ethics impact our work environment? It can be a question. Your case study. So we know the IFAC, International Financial Accountant Code of Ethics. Though we are accountant, so we have to follow it, and also all our institute adopted it. CA, CMA, others institute also. It is the base one. Integrity, objectivity, professional competence and due care, confidentiality, professional behavior, etc. as the basic code of ethics of professional accountant. And professional ethics are a standard that regulate the behavior of an individual or group of business atmosphere. Ethical principle can contest depending on the occupation, professional ethics that corrected the difference stage or level, difference industry also. Ethics is important to you and me also, day-to-day life and everyday situation, organization, home, etc. everywhere. Ethical principle and practice have the turn to the that means it's held to turn the organization to achieve the mission, vision, goal, and value addition. How can ethics and professionalism be applied in accounting? By applying ethical codes, which are fundamental principle that accounting profession choose to abide hence their professionalism, maintain the public trust, and demonstrate honest and fairness, also being, we know, the independent and objective. So, which required the accountant, we are accountant, to the unbiased in their decision making and having integrity. We need the integrity and confidentiality. It's must require the confidentiality and professional competence, and the professional behavior, expecting professional behavior from you. It's all for today from our case study. Today we have discussed from the module 2 strategic operational and ethical analysis. Discuss the strategic management, strategic investment analysis, operational analysis, ethical behavior through the organizational planning process, etc. So it's all for today. Inshallah, we'll meet